Okay, guys. We're gonna start with objective number 8. Cash budget. Objective number 8, cash budget. Just to remind you that we prepare starting with the sales budget, is it? The first one was for the chapter, sales budget, is it? So what is the question for the sales budget? What was the question for the sales budget? What is the total sales that I'm tending to achieve next quarter or next month or something, right? So this is the first budget. The second budget or schedule following the sales budget was what? Cash collection budget. If we are making our sales on credit, so I'm trying to collect these accounts receivable. So I'm selling on a credit, and after that, I'm trying to collect the credit sales, right? So if you remember, depending on the company, we do have something called collection pattern, 70, 30, 50, 50, 30, 30, 30, 10, including the bad debts, okay? After that, we prepare the production budget. So production budget depends on the sales budget, right? After the production, we do have something called direct material budget. So the question for the production, what are or how many units should I need to produce in order to sell that much, right? After the production, we have the direct material budget, which talks about what is the total materials should be purchased in order to be used in the production. After the materials, direct labor. If you like, after the material, we do have something called cash disbursements or cash payments, which is the what? The payments for the raw materials for the providers or suppliers, right? After the materials, we have the labor budget. After the labor budget, we have, which are the three components for the production: direct material, direct labor, and manufacturing overhead. So the manufacturing overhead completes the production, if you like, right? So after the manufacturing overhead, we have something called what? Selling and administrative, which is related to the expenses, not to the production. So the only expense that we have for the budgets are the selling and the administrative expenses, and it is not included in the production, right? So these are expenses. We do have something called ending finished goods inventory budget. And this is maybe important because it uses more than a budget. Just a quick review about the ending finished goods inventory. We do have an inventory at the end of the period. Inventory means what? Is it raw materials inventory or finished goods inventory? Both. But for this budget, we have to calculate the cost for the ending finished goods inventory. So we do have 5,000, if you remember the example, we have 5,000 finished goods reported to the production budget. So what is the cost for these 5,000 units? And this is to be reported to the balance sheet, to the financial position, under the title of inventory. So we have an inventory. If we need to report it to the financial statement, so what is the code for this inventory? Finished goods inventory used the direct material budget, the direct labor budget, and the manufacturing overhead. So we say the direct material budget, we need £5, if you remember the example. We need £5 for each unit or finished goods unit. And each pound costs $0.4. So we need $2 for the direct materials to be used to the finished goods. Similarly, we need for the direct labor 0.05 hours. 0.05. If you remember, we do have something like, I think 3 minutes, is it? Or 3 minutes, yes? 3 minutes, which is 0.5 hours per 1 unit. And we are paying $10 per 1 hour. So we need $0.5 for each unit as the direct labor. Manufacturing overhead, if you remember from the example also, depends on the labor. So we need 05 hours for each unit to be calculated as manufacturing overhead. The cost for the manufacturing overhead is calculated from something called the rate or the manufacturing overhead rate, the allocation. It is called in the cost accounting the allocation rate. Allocation rate is calculated from total manufacturing overhead dividing by total activity level. From our example, we have 251,000 for the total manufacturing overhead divided by 5,050 labor hours needed for the production. So we have a rate equals to 49.7 per 1 hour. So we are paying $49.7 per 1 hour. Multiply by 05 per 1 unit. So we need 2.49 for each finished goods unit as a manufacturing overhead. So the combination of these three is called the cost for one finished goods unit. So the unit is costing the company 4.99. Now, we do have 5,000 ending inventory in units comes from the production budget, multiplied by 499, and this equals to the ending inventory cost, which is reported at the financial position, 24,950. This was in the middle for the budgets to report the ending inventory for the financial budget. Okay. Any questions so far? The selling and administrative budget is an expense, as I say, and depends on the sales. Depends on the sales. So the example was talking about we are paying 0.05 per 1 unit sold. So we depend on the first budget numbers. Now let's move to the cash budget, which is one of the important budget for the chapter. Preparing the cash budget, learning objective number 8. Format for the cash budget. Format for the cash budget. The cash budget is divided into 4 sections. The first section is called cash receipts. Cash receipts, which is the section which lists all cash inflows. Inflows from whom? From the customers, from the receivables. So we are receiving from our receivables the collection of the credit sales comes from what? Cash collection budget, which is the second budget. Excluding cash received from financing. Financing means what? Financing? Loans. I'm financing my company, which means I need shares or loans, right? So this is the financing. The second part is the cash disbursements or cash payments, and we are paying for what? For the raw materials to the suppliers. So this section consists of all cash payments to the suppliers, which provide us with the raw materials, excluding any repayment of the principal and the interest, which is related also to the financing. Cash excess or deficiency section determines if the company will need to borrow money or if it will be able to repay funds previously borrowed, which means if the receipts are more than the disbursements, we have an excess. If the disbursements is more than the receipts, which means I have a deficiency. The last part, which is the financing part, details the borrowings and repayments projected to take place during the budget period. Let's have an example, additional cash budget information. Assume that we have this information for the company, maintains a 16% open line of credit, 75,000. So this is the interest rate if we need to borrow, okay? Maintains a minimum cash balance of 30,000. So the company at the end of the month must contain at least 30,000 on hand cash. Borrows on the first day of the month and repays our loans on the last day of the month. Pays a cash dividend of 49,000 in April. Do you remember what is the dividends means? Dividends, we are paying our shareholders part of our income called dividends. purchases of 143,700 of equipment in May and 48,300 in June. So we purchase equipment, both purchases paid in cash, and this is an outflow. We are purchasing equipment, and this is an outflow. Has an April 1st cash balance of 40,000. So at the beginning of April, at the beginning of our quarter, we do have on hand $40,000, and we'll start with this number. So let's prepare the cash budget. Cash budget. If you remember, we are preparing our cash budget for a quarter, April, or the second quarter, which starts with April, May, and June. So the beginning cash balance of April, which is given in the question, for 40,000. We will add the cash collections, and these cash collections comes from the cash collection budget or schedule of expected cash collections, which follow the sales budget. Remember that if we make our credit sales, and after that we are trying to collect these credit sales. So the 170,000, we do have this number in the second schedule or the second budget, which is called cash collections budget or schedule. So this number comes from there, 170,000. So I do have in my hand 210,000, which is called the total cash available for April, 210,000. Okay. The second part of this, budget, which is or summarizes the cash disbursements. Cash disbursements. Cash disbursements means the outflows or the cash that I have to pay for others. The first one, I have to pay for materials, 40,000, and this comes from the schedule of expected cash disbursements, which follows the raw materials. If you remember, I prepare the budget of the raw materials, and after that I have to say I have to pay for the raw materials for the providers or suppliers. So this number comes from cash disbursements schedule or budget. That's why the cash budget is important. Why? Because it connects all that we have, all the budgets that we prepared previously. So we are paying 40,000 for the materials, comes from the cash budget. We are paying 13,000 for the direct labor, and this comes from where? 13,000 comes from direct labor budget. Direct labor budget. If you remember the last number for the direct labor budget, what is the cost of our labor? So we have to pay 13,000 labor for April. So this number comes from direct labor budget. And we have to pay for the manufacturing overhead. 56,000 comes from the manufacturing overhead budget. Again, if you go back to the budgets, we do have the last number for the manufacturing overhead budget, 56 for April. So we need to pay out our manufacturing overhead for 56,000. The selling and administrative also, we have to pay 70,000 as a selling or administrative expenses, comes from selling and administrative budget. If we have any equipment purchased in April, and this is given in the question, we don't have any equipment purchased in April, so we have a 0 here, but we need this title for May and June. We pay 49,000 as dividend in April. All of these are payments under the title of cash disbursements. Okay, so cash disbursements total was 228,000. Now we will compare between the cash available for April and the cash payments for April or disbursements. So we can see that the disbursements or payments are bigger than the cash available. So we do have what? Do we have excess or deficiency? Deficiency? We have a deficiency. Deficiency means what? Deficiency means what? Yes, which means the cash payments are bigger than the cash available. So we have 18,000 deficiency for April. So we need to what? To borrow. We need to borrow. Now, the last part for the cash budget, if you remember, the first part was talking about the collections or the cash available to the company. The second part talking about the cash payments or outflows. The third part talking about the financing. Financing means the loans, interests, and the repayment for these loans. So we need to borrow. We need to borrow. How much do we need to borrow here? 48. Why? We do have a deficiency for 18,000, but from our example, we have to maintain 30,000 at least at each or at the end of each month. So we need to borrow 48,000 in order to have a 30,000 balance at the end of April. Any question about this? Any question? So we need to borrow 48 in order to maintain the minimum cash required at the end of April, which is given in the question for 30,000. Now we finalize April with a loan for $48,000. Now, later on in May or June, if we have an excess, we need to repay our loan plus the interest given in the question. Any question for April? Any question for April? Okay, then. What is the beginning cash balance for May? 30,000. What is the beginning cash balance for May, which is the ending balance of April? So we will start with 30,000 in May. What is the cash collections in May? This comes from cash collections schedule. So we do have in our hand for 40,000 cash available for May. Now we need to pay for materials, labor, manufacturing overhead, selling and administrative equipment, and any dividend paid in May. So again, the 72,300 comes from materials budget. Materials budget. We need to pay for materials for May 72,300, which is the cost of materials purchased over there in the budget of raw materials. If you remember the numbers, multiply by 0.4, multiply by 0.4, which is the cost per 1 pound of raw materials. So the cost for materials to be paid in May, 72,300. We need to pay 23,000 for labor. We need to pay 76 for manufacturing overhead, and so on. So remember that we have an equipment purchased in May for 143,700, this given in the question, and we don't have any dividends also given in the question for May. So we have to pay cash disbursements 400, but we have 440 available in our hands. So we do have what? An excess. Excess means what? The cash available is bigger than the disbursements. We do have 40,000. Can we pay the loan here? No, because we need to pay the total of the loan, which is the 48. We don't have enough cash, if you like, to pay off the loan. We need to have the full amount of the loan, which is 48. Okay? This is also given in the question. We need to pay the loan as it is. Yeah, we don't have an indication in the question that we can pay part from that loan. So what is the ending balance of May? We don't need to have any loans to borrow, right? Because we have an excess cash for May at least. So the ending balance of May is 40,000. Beginning balance of June, 40,000. Beginning balance of June, 40,000. So we do have 40,000 in June. 360 comes from the cash collections. We do have 400,000 available in our hand. These numbers comes from the related budgets for June. 269,500 are the cash disbursements or the total disbursements for June. So we do have, and what? an excess for 130,500. 130,400, which is the excess. Excess means that the total cash available in our hand is more than the cash disbursements that we are trying to pay. So here, at the end of the quarter, in June, we can pay off our loan. So we will pay off the 48,000 as a loan. Remember that we do have a title here, financing. Borrowing means what? The loans. The repayment means that we are paying our loan if we do have an interest related to that loan. So the 48 will be between brackets, which means I'm paying off my loan. The 1,920 is the interest. Interest, we do have a percentage given in the question, which is 16%. We need to pay an interest related to this loan, 16%, multiplied by the principal, which is 48,000. What about the 3 months? Is it 3 months here? 3. Because what? We will cover April, May, and June. We do have our loan in April, and we are paying in June. So we do have 3 months, 3 months out of 12. Why it is out of 12? Because the 16% is related to annual percentage. And most likely they are given annual percentage for the interest. So 16% is related to a year. That's why we need to the fraction of 3 out of 12. So 1,920 is the interest. The total to be paid 49,920, which is the principal plus the interest, and we still have excess, which is 80,580, the ending balance of the cash. 3 out of 12 means what? The 16% is related to 1 year. In all cases, not most of the cases, in all cases, they are given the percentage of the interest related to a year. The annual rate for the interest is 16%. That's why we need only 3 months, okay? What about the 80,580? What is that? The ending balance of the cash at the end of the quarter, or at the end of June, which is the same, right? So this will be the ending balance reported to the financial position. No, okay. You don't have enough cash here in May to pay off the 48. This is the point. This is the point. According to the question, I have to pay off the loan as it is. I don't have an option to pay partial for the loans, right? The 80,580 will be the cash balance reported to the financial position. If I need to prepare now or after this budget, we need to prepare the financial position and the income statement. So the 80,580 will be the balance for the cash reported in the income statement. What about the totals? What about the totals? What about the 40,000 beginning cash balance here? Is it the total or the beginning cash of April? April, because we are talking about the beginning cash. What about the 940 total? The 980 total, 185 total. What about these are totals also? Why the 80,580 will be one number only, not a total? Because we are talking about the ending balance. Ending balance of June will be the ending balance of the quarter, which means again the cash balance to be reported in our financial position. Any question for the cash budget? Cash budget. Okay, then after the cash budget, we need to prepare our financial statements, which is the budgeted income statement and budgeted financial position or balance sheet. So let's prepare the income statement in learning objective number 9. Prepare the budgeted income statement. Income statement includes what? Income statement includes what? Revenues and expenses only, right? Revenues and expenses only. So the title, which is a royal company budget and income statement, and remember that we have for the period ending June 30. We are representing the income statement for that period, so the title will be for 3 months or the quarter ended June 30. Okay, we do have revenues, and in our example we have only sales. This number comes from what? The sales budget. If you remember the number or the total number for the sales, we do have 100,000 units multiplied by the price, which is $10. So we have a total of $1 million revenues or expected revenues for the quarter. By the way, why we don't have 3 columns for the income statement? Why we don't have 3 columns? Why we have only 1 column? We have only 1 column, which is the total for the quarter. Why? Because the financial statements, which is income statement and the balance sheet, we are talking about the quarter as a quarter, not individually for each month, right? So the income statement here should have only 1 total, which refers to the quarter. Remember that if we have another revenues, we have to report it under the sales. But for our example, we have only sales revenues, okay? Minus the cost of goods sold, we do have 100,000 units multiplied by 4.99. Do you remember this number? That's why this number is important. Do you remember this number? This number comes from what? The finished goods budget. Finished goods budget. We have to calculate what is the cost per 1 unit for 2 things, for the cost of goods sold and for the inventory at the end of the period. So we do have a cost for 1 unit, $4.99 multiplied by 100,000 units, and this will give you 499,000 to be deducted from the sales to have something called gross margin. Gross margin. We do have selling and administrative expenses, and this is, if you like, the only expenses to be reported in the income statement for the company. Remember that the manufacturing overhead is not an expense. So what is it? The manufacturing overhead is what? Is it an expense? Or if you like, is it a period or a product? It is a product, yes. The product includes direct material, direct labor, and manufacturing overhead. The period cost is the selling and administrative only. The word period means that we have to report it into the income statement, not into the what? Not into the financial position as an inventory. So we do have a selling and administrative expenses 260 comes from the selling and administrative budget. Deducted from the gross margin to have something called operating income, 241,000. And we have a title, and it should be a title or a separate title in the income statement as interest expense. Interest expense comes from the cash budget, which is just prepared, 1,920. So the net income will be the difference, 239,080. Suppose that we have an income tax. So what is the place for the income tax then? It will what? Be before or after the interest? After the interest, before the net income. After the interest, before the net income. If we have any percentage for the income tax, it will be multiplied by the net income and it should be the last number for the income statement. Any question about the income statement? Any question? Okay then, learning objective number 10, which is the last one. Prepare the balance sheet or the financial position. Financial position. Financial position includes what? Or the balance sheet includes what? Assets, liabilities, and owner's equity. Assets, liabilities, and owner's equity. The company reported the following account balances prior to preparing its budgeted financial statements. We do have a land for 50,000, and the land is an asset. Is it? Common stocks means what? Equity. Common stocks means ordinary share capital. Common stock is related to the GAAP word. The word for the IFRS is called what? Ordinary share capital. Ordinary share capital. This word, common stock, is related to the GAAP, which is the American rules. If we are using the IFRS, the word will be the ordinary share capital. So this is a capital. Return earnings will be 248,650. April 1st means what? Yes, but April 1st means what? The beginning balance of the return earnings. Beginning balance of the return earnings. And remember this number because we will use this number 248,650. This will be what? Return earnings at beginning of the period. Beginning of the period. We do have a recoupment for 175,000. Remember that the government, we do have an additional purchases for the government in May and June, and this is calculated also. So the balance sheet or the financial position includes, if you like, two titles. The first title is an assets. The second title will be the liabilities and the equity. Assets, we do have cash for 80,580 comes from, this number comes from cash balance, which is the ending cash balance for the quarter, reported to the balance sheet at the end of the quarter, which is June 30. Just to remind you about why we do have a snapshot here, June 30. For the balance sheet, we say that we are reporting our assets, liabilities, and equity as a snapshot, which means June 30. It is not for the period like the income statement. No, we are preparing balance sheet as June 30, as in June 30. Cash for 80,580. Accounts receivable for 90,000. If you remember, accounts receivable is related to what? Sales or sales collections. Collections means what? We are collecting during the period, during the quarter, right? And at the end of the quarter, which is related to something called the credit sales, not collected until the end of the quarter. So if you remember from the example, the pattern or the collection pattern for the company was 70-30. 70 to be collected in same month, 30 to be collected in next month. So at the end of June, we still waiting for what? 30% of what? Of June. 30% of June. Why? Because we collect 70% in June, and we still waiting the 30% to be collected in July. But we finalize our budget. So the 30%, which refers to 300,000 sales of June, multiply by 30%, this gives you 90%. So at the end of the quarter, we're still waiting to collect 90,000, which refers to 30% of June sales. Why again? Because we are collecting 70 in the same month, 30 in the next month. Why we are not talking about May or April? Because we collect these percentages during the quarter. If we are talking about May, May is collected 70% in May, 30% in June. So we don't have any accounts receivable related to May. We only have related to June. Raw materials inventory, and this is important. Raw materials inventory. Now, you have to report your inventory. And for the example, we do have two kinds of inventory: raw materials inventory and finished goods inventory. If you remember from our budgets, the raw material budget at the end of the period, at the end of the quarter, we do have 11,500 pounds. This is a pound because it is related to raw materials. And the cost per 1 pound was 0.4. So the cost for this inventory is equal to $4,600. $4,600, referring to the raw materials cost at the end of the period or the quarter. And we have another inventory referring to the finished goods inventory. We do have 5,000 finished goods inventory, and the cost was 4.99 per 1 unit, and this is equals to 24,950. 24,950. The land is 50,000, equipment 367,000, including the beginning balance, which is 170, plus the purchases done during the quarter. Total assets will be 617,130. Liabilities and the stockholders' equity. We do have accounts payable. Accounts payable, if you remember, accounts payable referring to what? To the raw materials purchases. If you remember from the example, the company pays 50 in the same month, 50 in the following month. We are paying for the supplier, which means for the raw materials. So we still need to pay 50% of June only. Why? Because May is paid 50 in May, 50 in June. June is paid what? 50 in June, 50 in July. But we have to report at the end of June. So we need to pay 50% of the purchase for June, which is 56,800, and the 50% refers to 28,400 to be reported as a liability. Accounts payable means we need to pay for our suppliers. The common stock or ordinary share capital 150,000. What about the return earnings? Return earnings. How to calculate this number? 438,730. Exactly. Thank you very much. So the return earnings to be reported as June 30, this refers to the ending balance of the return earnings. Now, the beginning balance of the return earnings given in the question for 248,650 plus what? Net income minus all dividends. We calculate our net income from the previous budget. We do have the total for the dividends, and the total will be 438,730. This refers to the ending balance of the return earnings, ending balance for the return earnings. So the total for the liabilities and the equity will be 617,130. Any question? The calculation for the return earnings is here. Beginning balance 248,650. Net income calculated from our previous budget 239,080 minus the dividends, which is given in the question for 49,000. So the ending balance will be 438,730. Any question, guys? Let's have a question about these budgets at least. Cash budget. Let's prepare this question or do 87. 87. Cash budget. Garden Depot is a retailer that is preparing its budget for the upcoming fiscal year. Now we are preparing the budget for 1 year, including 4 quarters. Management has prepared the following summary for its budgeted cash flows. We do have total cash receipts. Total cash receipts. By the way, we are preparing the cash budget because it is related to many budgets. Most likely, if the question is asking for the cash budget, they will give me the other information for the other budgets. Okay. The cash receipts, which is the cash collections for the quarters, 183, 30, 210, 230. So we need the total here, is it? The cash disbursements, 260, 230, 220, 240. And this comes from the cash disbursements budget, right? The company's beginning cash balance for the upcoming fiscal year will be 20,000. This will be the beginning balance for the period. The company requires a minimum cash balance of 10,000. 10,000 at the end of each quarter. We need to maintain 10,000 minimum cash and may borrow any amount needed from a local bank at a quarterly interest of 3%. Be careful about the percent here. They give me a 3% quarterly, which means annual will be what? 12%, is it? The company may borrow any amount at the beginning of any quarter and may repay its loans or any part of the loan. This is a different story. So we need or we can repay our loans in a partial. At the end of any quarter, interest payments are due on any principal at the time is repaid. For simplicity, assume the interest is not compounded, which is a simple rate of return. Prepare the cash budget for the upcoming fiscal year. Prepare the cash budget for the upcoming fiscal year. Okay, then look at the solution. Garden Depot cash budget, which is the title for our budget. We will start with the beginning cash balance. Beginning cash balance given in the question for 20,000. We need 4 columns and the total. So beginning cash balance for the first quarter will be 20,000, and we are moving vertically, not horizontally, in the cash budget, is it? So we need to start with the 20,000 for the first quarter, plus the total cash receipts given in the question for 180, total cash available, which is 200, the total of these two numbers, minus the total cash disbursements. By the way, they give me the total cash disbursements. Can you tell me what are the components for these disbursements? What are these? Materials, labor, manufacturing overhead, selling and administrative. These are the disbursements that we have to pay off. Okay, so 260, which is the cash disbursements. For this question, they give me a total for the collections or disbursements. 260 will be the cash disbursements. The available cash is 200. Disbursements is 260. Then we have deficiency for 60,000. We need to borrow what? 71,000 at least at the end of each quarter. So we need to borrow. Remember that we have 3 sections for the cash budget, 4 sections theoretically, 3 sections in practice, if you like. The first part will be the collections or the cash available, if you like. Second part will be disbursements. The third part will be the financing. Theoretically, we need to report the deficiency or excess as a one part, and then we are talking about the financing. So 70,000 is the borrowing, because we need to maintain 10,000 at the end of plus the 70. We have an ending cash balance for the first quarter for 10,000. The beginning cash balance for the second quarter is what? Ending of the first quarter, which is 10,000. 10,000. From the question, we have total cash receipts 330 for the second quarter. So cash available will be 340, which is the 10 plus 330. Cash disbursements from the question is 230. So we have what? An excess for 110,000. 110,000. Can we repay our loan here? Yes. So we have enough cash to repay the 70,000 plus the interest. So the interest for the 70,000 is calculated from what? 3% multiplied by 70,000 multiplied by what? Or that's all? By 2 عشان 2 quarters. 2 quarters. So we need to pay interest 4,200. This is calculated from 70,000 is the principal, multiplied by 3%, multiplied by 2. Why 2? Because we to have 2 quarters. And the 3% refers to a quarterly interest rate. Suppose that they give me a 12 annual interest rate, this will be a different story. Why? Because we need to multiply by 6 out of 12. Thank you. Why? Because the 12 refers to 12 months and we need 2 quarters, which is 6 months. But the question gives me 3% quarterly. That's why we times the number by 2, which is 2 quarters. 4,200. So the total financing will be 74,200 minus the 110. We do have 35,800 ending cash balance for the second quarter. Third quarter will start with this number. 35,800 comes from the second quarter plus 210, 245,800. Disbursements 220. We do have 25,800 excess. We don't need to borrow. Why? Because we don't have any deficiency. So we do have 25,800 and this ends the quarter. So the ending balance for the quarter, the third quarter, will be 25,800. 25,800 will be the beginning balance of the fourth quarter. Plus 230 given in the question, 255,800 the total of these two numbers, 240 the disbursements. We do have an excess. Excess means the receipts or the cash available is bigger than the disbursements. So we do have 15,800. 15,800 will be the ending balance of the fourth quarter, and it will be the ending balance of the quarter, which is the year. And this will be reported to the balance sheet. So what is the cash balance if we are preparing the balance sheet? What is the cash balance in the balance sheet? It will be 15,800. Any question for this? Any question? Type another question then. Another question. Income statement, which is The next question, budgeted income statement. By the way, it is a story of just selecting the numbers and put it in the right places. For the cash budget, for the income statement and the balance sheet, it is a kind of only choosing the correct number in the correct place. Budgeted income statement for question 8.8. Gig Harper Boating is a wholesale distributor for a small recreational management has prepared the following summary data to use it as an annual budget process. We do have budgeted unit sales, This is a number, is it? Units. Selling price is 1,950. Cost per one unit, which is 1,575. Variable selling and administrative expenses per one unit is 75. Fixed selling and administrative expenses per year is 105,000. Interest expense for the year is 14,000. From this information, prepare the company's budgeted income statement for the year. Let me prepare the income statement. The starting point for the income statement will be what? Will be the title. So the title will be what? The title of the income statement will be the name. Gig Harper, right? Income statement for the year. Is it year? Year. For the year ended for that date. So the starting point will be sales. How much is the sales? 460 times 1,950, and this equals to total 460 units times the price, which is 1,950. This will give me 897,000, which is the total sales revenue for the company, minus the cost of goods sold. This number is given, and this is maybe the most important number and a little bit tricky number to be calculated. 460 units multiplied by 1,575 per one unit. This will give me the cost of goods sold, $725,500. The difference between these two numbers will give me the gross margin or gross profit. So the difference between these two numbers will give me 172,500. Selling and administrative expenses. Remember that we do have two parts for the selling and administrative expenses. We have variable part and fixed part. Variable means what? Depending on how many units sold. The selling and administrative, most likely, we are depending on the sales units, not production. So the variable part depends on how many units do we sell. So 460 units sold times 75 per one unit is given in the question. Okay, so this will be the variable part of the selling and administrative expenses. The 105, which is the fixed part, is given in the question. This is a fixed, go back. This is a fixed part. Why? Because it is related to a year. It is not depending on how many units that you are selling. So 105,000 is added to the variable part, and then we do have a total of 139,500 to be deducted from the gross margin, 172,500, and we do have net operating income for 33,000. The following title will be the interest expense. Interest expense. This number is given in the question. If it is not given, they have to give me a percentage to be multiplied by the net income or the net operating income. So if we don't have the 14,000, they have to give me a percentage multiplied by 33,000, and we can calculate it. 14,000 is the interest expense to be deducted from 33,000, and the net income will be 19,000. Suppose again that we have income tax percentage. This will be before the net income, after the interest expense. Okay. So we do have a title, if you like, net income before tax, multiplied by the income tax rate equals the net income. The last one, which is the budgeted balance sheet. Budgeted balance sheet 89. These are given information for the balance sheet. Given information for the balance sheet 89, but budgeted balance sheet. Management of Mecca Corporation, and they give me the ending balances for most of the assets, liabilities, and the equity, apart from the cash. The cash is calculated from the balances. So prepare the balance sheet. The beginning balance of the retained earnings is 28,000. As we learn how to calculate the ending balance for the retained earnings, the income or net income is budgeted to be 11,500. The dividends are budgeted for 4,800. All of these information given in a note following the question are to calculate the retained earnings at the end of the period. So prepare the balance sheet. Balance sheet will give you, or the titles for the balance sheet. Mecca Company budgeted balance sheet at a date, let's say December 31st for that year. Assets, current assets, cash, and the cash is calculated. Cash is calculated because it is missing. It can be calculated from the numbers of the balance sheet. Accounts receivable, given in the question, supplies, inventory, total current assets, not important for this stage to classify it as current or non-current. You can put or list all assets without these titles. So the total current assets is 23,500. Plant and equipment, we do have equipment for 34,000 given, minus accumulated depreciation 16,000. The net for the plant and equipment will be 18,000 to be added to the total current assets. Total assets will be 41,500. The equity section includes liabilities and the equity. Accounts payable for 1,800. Common stock, which is the ordinary share capital, for 5,000. Retained earnings is calculated here. So the only maybe tricky word in the balance sheet to calculate the retained earnings at the end of the period. So the retained earnings is calculated from here. Retained earnings at the beginning will be 28, plus the income 11,500, minus the dividends for 800. This will equals to 34,700 to be reported here in the equity section. So the total liabilities and the equity will be 41,500.